with us, we have another expert from the area, Professor Shankarshan Basu. Thanks for joining us.
Thank you.
What prevents many professionals from translating financial theories and models into actionable market strategies?
I think the primary problem is that a lot of people get trained in the theory but don't really have the access to the practicalities of it when they're taught. And then when they come onto the desk, the question is, how do I apply it? So the lack of some of these specific skills kind of create a gap between what they know and how they apply it, because there's always this gap between theory and practice, which is the bridge. And therefore, while people might be theoretically sound in their knowledge and understanding, when it comes to the actual data-driven practicality, there is this gap, and that's what creates a problem, because at the end of the day, in some cases, there is no right or wrong answer. It's based on certain assumptions which you have to make and the validity of assumptions that come in. So unless you're able to interpret that, and which is where I think that the things break down, that people's ability to interpret that becomes the challenge.
How should institutions rethink market risk, liquidity risk, and things like that?
I think fundamentally institutions should look at risk as a larger context. Market, liquidity, credit are subparts of this larger basket, or this subsets of this basket called risk. Institutions should obviously relook at it, because we live in very uncertain times. If you look at the definition of market risk fundamentally is nothing but changes happening on external factors on which you don't have any control. And I think we are increasingly living in a world where, for example, we don't have a control on what will be, let's say, the exchange rate, the inflation, and things like that. So unless I have an understanding of how to model that or what to do to react and also be dynamic in reacting to those changes, we have a challenge. Similar is the question of liquidity. A lot of us out there do have access to assets, but the question is, how liquid are these assets? In other words, if I need the money at, let's say, 2 a.m, do I have money? I may have net worth, but do I have cash? Because that's what's probably going to be needed. So there is an understanding, and then people need to relate to this fact, institutions and individuals, that having assets is important, but having liquidity is also equally important. You can't just have assets but no liquidity, but that could create larger problems.